How Kanye West built Yeezy. In 2016, rapper Kanye West made headlines when he begged Facebook's CEO Mark Zuckerberg via Twitter to invest $1 billion into his ideas, because he was personally $53 million in debt. West never got the billion from Zuckerberg, but it appears West has now healed his own financial woes. His apparel brand Yeezy is a billion-dollar empire. According to Forbes, and over the past 12 months, Forbes estimates West has earned over $150 million. His income is due largely to Yeezy's Adidas deal. Let's see how Kanye West made Yeezy a successful brand. The chances are pretty high that you've already heard of the Yeezy. It's the sneaker brand of Kanye West in collaboration with Adidas and now Gap. To grab these babies, people across the US would camp outside shoe stores in dead cold winter, hire taskers to wait in line on their behalf, and even deploy sneaker buying bots to nab a pair online before they sell out. Those who are unable to purchase these within the few precious seconds before they sell out end up spending thousands of dollars over the market value to purchase them in the resale market. He has successfully created one of the most hyped sneakers of all time. However, there are some potential roadblocks in the way ahead that he must navigate through to help the company stand the test of time. Kanye West had always been passionate about fashion. For years, he'd been trying to break into the industry, but his designs never made the cut. Fashion gatekeepers claimed he wasn't a real designer. He even interned at Fendi in 2009, where he was paid about $500 a month. In 2015, he said he'd fallen $16 million in debt in his attempt to get his clothing line off the ground. No matter what he did, he still couldn't quite knock down those stores. So he took an alternative route through the sneaker world. I was a sneakerhead as a kid, even though I didn't have the money to buy the shoes I loved. When I was in 4th grade, I was drawing Jordans when my mama couldn't afford them. I was drawing those Jordans, getting kicked out of class for drawing them. He collaborated with Nike, and within 5 years, West and Nike released 3 varieties of Air Yeezys, retailing at over $200. The shoes were released in extremely limited quantities and sold out in a flash. The sneakers resonated with the youth, and they finally put West on the map of the fashion industry. Kanye leveraged his newfound success to switch to Adidas, where he was promised more creative freedom. In his stint at Adidas, Yeezy has generated annual revenues of over $1 billion, further cementing the position of the brand. However, the way ahead isn't as straightforward as we might think. The ultimate paradox: selling more kills the demand. The shoes have, till now, banked on the coolness factors that emanated from the inherent premium nature, the Kanye West effect, and the perceived scarcity. Fewer shoes in the market meant they were more special. Let's run some numbers. In 2018 through 19, Adidas manufactured 1 million Yeezy shoes, netting more than $1 billion in revenue. In the same time frame, Adidas produced over 400 million pairs of shoes. Maybe they weren't sure how big the market demands was for Yeezys, and if it justified producing more pieces. Market analysts say that to keep people wanting Yeezys, it's critical to make sure supply stays behind demand. The reasoning: when everybody can get one, nobody wants one. Kanye West, on the other hand, has expressed intentions to make the product accessible to as many people as he can. He wants the Yeezys to go way beyond expensive and inaccessible shoes so that everyone can afford them. Kanye wishes to recreate an iPhone phenomenon. However, an iPhone now sells itself more in premium UI experience, better services, and security than just brand value. Yeezy is yet to create a big differentiator apart from the brand. Brand value closely associated with Kanye West. This is in general an issue with any celebrity-related brand. The brand value, and therefore shoe sales, are dependent on and correlated with Kanye's public image. In show business, getting into a controversy isn't that uncommon. This might lead to high volatility in business sales and stock value. This is often a red flag for investors. And West needs venture backing to scale Yeezy. Selling multiple varieties under the same name dilutes brand. Even if you have multiple segments of the shoes, brand dilution will happen. West is trying to marry high fashion and accessibility, two opposing forces. They work against each other, and they may be a problem. This is a big reason why consumer good manufacturers like P&G and Unilever give different products in their portfolio different names. The majority of people never think of P&G when they purchase these brands. Hence, the brand value of one doesn't spill over the other. This helps P&G handle their business well. If Kanye sells multiple varieties across the price spectrum and all under the Yeezy banner, he'll end up confusing the customers of who the brand pertains to. Going too fast can kill the brand. One expert, NPD Group's sports industry analyst Matt Powell, feels that Yeezy's staying power will be determined by how careful Adidas manages its Yeezy's inventory. He stated that brands that revolve around celebrities tend to die if they try to grow too fast here. He said, Yeezys could look to Jordans as an example of how to grow a brand while maintaining its cool factor. It took Nike 3 decades to build its iconic Jordan brand into a $3 billion business. For years, the Jordan business grew about 10% a year. Had they cashed in for more, they would have died really early. The math behind this is simple. Say, Yeezy targets 1% of the market to ensure it's perceived as premium. If it targets more, the sense of scarcity might vanish. Hence, the constraint. Only go after 1% of the pie. If they can't increase their share of the pie, how can they increase their revenues going forward? Increase the pie size. Go for bigger market size. Venture abroad. Take it gradually, and as every year passes, the market size will increase due to factors like increased purchasing power and increasing population. This video explains how Kanye West went from different ups and downs while starting his company to making it a multi-billion-dollar empire, and what are his future plans for the company. That's it for today's video. If you enjoyed this video, then give it a huge thumbs up, and also make sure to subscribe to our channel. Thanks for watching. See you in the next video. Until then, stay safe.